Hello, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, September 18, 2015. This week we saw some volatility as stocks ran into resistance at a pretty logical level. Bonds outperformed stocks as Fed kept interest rates unchanged, and this especially was pronounced as financials across the board pretty much sold off. We'll look at US dollar as apparently it's headed for a fourth retest of a major support in about 5 months in a 5 months time frame. And of course, weakness in dollar is helping precious metals. Okay, so let's look at the charts. So this is a chart of S&P 500 large cap index. This is a little bit of a longer term chart than I normally look at. This chart has 50-day moving averages, exponential moving average on them. So you can see a 20-day, 50-day, and 200-day exponential moving average. So this Thursday, it's pretty clear. You can see price tried to go above the 50-day exponential moving average and was clearly rejected right there. This candlestick, the Thursday's candlestick, I think is a clear and pretty obvious example of a shooting star candlestick. So what happened is price opened here at the top. Throughout the day it spiked above the 50-day moving average. Around here, the Fed was announcing that they were going to keep interest rates unchanged, and then it just sold off throughout the day. Finished the day lower than the open. So this is a classical shooting star candlestick. By itself, it's not that big of a deal, but the next day you can see there was a clear confirmation as selling continued. In fact, we had a 1.62% loss on Friday. So, for now, this chart, the biggest feature of this chart is, of course, this major breakdown. Notice this was basically 3 days worth of selling, maybe 4 days worth of selling, but this decline was just very steep. So at this point here, in late August, following this decline, we had this is a stocks above the 20-day exponential moving average, 50-day and 200-day. So you can see that was basically at zero. There was no stocks above the 20-day or the 50-day, and very few were above the 200-day. Now my threshold for bullish versus bearish for the long term is 200-day moving average is 40%. We clearly broke that support, and we were still not even able to get above 40% since this breakdown. Even though the price was very oversold, and I mentioned that the rebound was likely here, it indeed occurred. So if you, for some reason, were lucky enough to buy here and exit right here at the top, this is about an 8% gain. Of course, it's very difficult to do unless you're doing maybe 30-minute trading or something like that. I do mostly daily charts, so at this point of the game, I'm considering S&P 500 to be most likely in a bear market, or at the very least some sort of a correction. The 50-day EMA is below the 200-day EMA, so my bias have changed from bullish to bearish. So if we're going to continue, if we're going to look at this feature of the chart itself, so this looks like a major breakdown and then a rising wedge, or you can also think about it as a bear pennant or bear flag of some sort. Now this Friday's close may have broken this trend line. When I say may have, because it's really difficult to draw trend lines unless they just jump right at you. This one kind of looks like a good trend line to me, and this looks like a nice break. But you can also redraw this trend line and include the Friday's low, and in this case it will not be yet a broken wedge. So that's one of the reasons why I don't really trade on the various chart patterns that much, and I look for signals that are not necessarily chart patterns. Excuse me. But having said that, there are all kinds of chart pattern recognition softwares out there, and robots looking for this similar breakdowns. If we see any more downside on Friday, let's say we close around 19, I meant on Monday, let's say we close around 1950 here, most likely this trend line would have been broken. So it's entirely possible that this rebound that was it. So if this is indeed a breakdown here, we're going to be retesting this low from August, and most likely this low from October is actually a little bit lower. If we don't hold here, that's a most likely like a sure sign that we're gonna continue making lower lows and lower highs, which is a characteristic of a bear market. Another nice feature, another nice way to look at breadth is S&P 500 bullish percent index, and I have similar thresholds 60 and 40. So if if S&P 500 is above 60%, then it's in a bull market, and vice versa. In isolation, they don't really mean much, but at market tops and bottoms, they do. The market breadth does matter more than during normal advances, long-term advances, or long-term declines. If this is indeed a beginning of a bear market, then for now the breadth is indeed confirming this breakdown. Okay, next we will look at bonds. And I have three different bond funds that I wanted to mention. The reason is because bonds really are outperforming stocks across the board. So TLT, this is Treasury Fund, long Treasuries. My buy signal right here was actually before Fed, I think this was on the 13th of September. And we had nice, what I thought was like a whipsaw. We had a drop, then we held support, so you can see there was a buying pressure here. This candlestick by itself, it looks somewhat bearish and maybe indecisive, but the next follow through on the next day was clearly bullish, so there was a lot of buying pressure. And then this is on Fed day. This is a Fed day. And then next day, there was a clear confirmation with a gap up and a continuation to go higher. So TLT gained 1.54% on Friday, but most of it was from the gap up. And this is indicative of money rotating out of stocks and into safety of the bonds. Next is AGG, which is basically a general diversified bond fund. It has a little bit of treasuries, a little bit of municipal bonds, some of the corporate bonds, all kinds of mortgage-backed security, etc. So it's a very diversified fund. And you can see a really big white candlestick here on Thursday, which actually was a buy trigger for my system as well, and they follow through on Friday. Now, this is not a very bullish candlestick, but we may see a little bit of a backfilling here before we continue higher. I think that if what I mentioned before, if we're going to be retesting lows of October lows for stocks, then bonds would be a clear place to rotate into. for money that has not been in stocks, that are not been buying stocks. And look at this. This is SCTR, Stock Charts Technical Rank, for a general bond market fund. This is not a very sexy fund at all. This is one of those things that people just buy to kind of keep money in the safety. And look, it is in the top 90, top 10% of all ETFs, really. So this is the Stock Charts Technical Rank is at 88, but it was above 90 here. So this is telling you something, that money is truly not really interested in chasing risk assets, which are stocks. So next one, I'll show another bond fund, which is MUB, Municipal Bond Fund. And this one is actually the strongest of the three. The previous ones, let me just go back for a second. TLT here, so you can see the red line, which is a 50-day moving average, is below the green line. On AGG, the red line is getting close to the green line. But here on MUB, actually the red line is already above the green line. So if you're a trend follower where you say, okay, 50-day moving average is above the 200-day moving average, I'm going to keep a bullish bias. And here there was an oversold condition right here. Then here this was a trigger for you. And this is a clear trigger and a clear follow-through. Actually, MUB was the strongest performer, and you can see the Stock Charts Technical Rank is actually at 91, almost 92. So it's a strongly performing fund, and this is one of those funds that doesn't move much. You got 0.23%. This is telling me volumes about really a safety posture of market participants. All right, let's look next at one of the stock funds, which is KRE. This is a fund that holds a lot of small regional banks in it. And what happened on Friday, on Thursday, is you can see there was a large red candlestick. But the important thing is that it was very large and it encompassed the entire range of previous days on Wednesday's candlestick. So this is an outside reversal, which was confirmed the next day by a large gap down and a following of price lower. So KRE banks, regional banks, they make money the old-fashioned way of basically lending money out at larger rates, while borrowing money at lower rates. So you have spread between the low rates that they are borrowing money at and at the rate at which they are lending the money at. So basically, the spread is where they make the money on most of the time. And if the interest rates are really not moving lower, what I meant to say, if the interest rates are actually moving higher as the bonds are gaining, then the spreads for the banks the margins for the banks are dropping. Therefore, investors are dumping financial stocks. This is, generally speaking, not a very good sign when financials are losing. Now, this particular fund is still, I can make a case for it to be in a bull market because 50-day moving average is above the 200-day moving average, etc. So there was actually a buy point here, a buy trigger, if you're playing it for a short term. However, if bonds continue to gain and interest rates continue to drop, most likely financials will get sold and continue lower. So let's look at next at US dollar before we look at gold. So US dollar did not like Fed's announcement. There was a support break on Thursday, and this is also close below the 200-day moving average. So it was a kind of double whammy here. It broke support from these lows here, and also broke the 200-day moving average. So it's already 2 days below the 200-day moving average. So if you just look at this chart, we have 3 times we had the support in the $93 area that was held. Looks like we're heading for a fourth retest of this support. Now, if we close below this area, and I'm guessing if we close below 93, the uptrend in the US dollar may be called into question. And this, if United States dollar drops, may finally put some relief on various commodities, oil, natural gas, etc. And of course, the biggest recipient of relief if the dollar drops would be precious metals. So let's look at precious metals next. So gold daily chart. Still, I clearly, at this point, it is still clear to me that this is a bearish security. It is actually quite bearish. So we have red line, the 50-day below the green line, the 200-day moving average. We had a huge drop, broke several support levels here. But then we finally found support here actually at the multi-year lows at the 1072. And then we had a nice rebound that went as far as the broken support. Then the sellers stepped in and pushed the price higher. But here the price has actually made a higher low. This is a higher low compared to this low. So this is kind of like the first step for a bearish security to make a turnaround. So make a higher low. It was confirmed by on balance volume. In other words, volume was more higher on the up days than on the down days. So that's a positive sign. Also, MACD is not yet in the overbought territory, and we may actually see more upside. At the very least, I mean, we already are at a broken support level at 1140. So this is a logical place for gold to fail. However, if it doesn't fail, then we could see a run up to this resistance level, 1169, 1170. And then if we don't fail here, we could see a run up to the 200-day moving average. Now, in the past, like for example right here, this was a clear failure. We had a shooting star and then a confirmation the next day. And MACD was already overbought at this point, so the short sellers stepped in and just there was no stopping them. So it's entirely possible we'll see something of the same magnitude again, especially if the dollar doesn't drop, especially if the dollar rebounds and continues higher. All right, let's look at GDX because it has a little bit more data than gold to it. So GDX, obviously bearish, huge drop, very large decline here. This was from $21, almost 21 and a half, all the way to $13. Very large decline. Now, same thing really. Large decline. This actually kind of spoke volumes to me when there was a very large gap and then continuation lower. So this was an exhaustion gap to me when the sellers really exhausted themselves. Finally, it bottomed out at 1301 and we had the counter trend rally. Now this counter trend rally I mentioned in one of my previous videos. One of the better indicators for me at the very least is gold bullish percent index. So at this point of the game right here, this bullish percent index was at 0. In other words, it cannot really go any lower. It goes from 0 to 100. What this means is that 0% of stocks within the index GDX was on a point and figure buy signal. Then we had right here we had a increase from 0 to, I believe it was about 3%. In other words, one of the stocks went on a buy signal with a pretty sizable rally here, but failed at the 50-day moving average. Remember, notice we touched above it, tried to close above it, completely failed, and then collapsed lower. But we did not break this support. So we had 1, 2, 3 very nasty retest of this support. In fact, the price really punched through it to below the support, but it didn't close. In fact, it closed above it. This was one of my also signs that something was really afoot, and the sellers and the short sellers really could not push the prices higher. And right here again, bullish percent index went to 0, but then it went to more than 0. So we had another nice rally here over the past, well, this week basically. Now we broke out of a couple of resistance levels, first minor resistance level here, but also we were able to close above this blue line, which is a 20-day exponential moving average. So this is an important sign for bearish security. It was able to close above the 20. Then it was able to close here. It wasn't able to close, but on Friday actually it was able to close above the 50-day moving average, this red line. And you notice this hasn't happened since June. This was the last time GDX was above the 50-day moving average. This is a positive sign, but the action on Friday was not terribly inspiring. So what happened is prices gapped up, spiked during the day, but then sold off by close. And this looks like a hanging man candlestick, where you have upper real body here, a small wick at the top, and a large tail at the bottom. So this looks kind of like a classic hanging man candlestick. If we see a push lower in prices in GDX, this would be confirmed, and we may actually get another retest of this support at 13. Alternatively, of course, we could push higher and push here to $16 as a first test of this counter trend rally in GDX. Now, I think that on balance volume is actually confirming this potential sizable rally that we might see. You can see that GDX traded kind of flat, but on balance volume actually made a higher low. And the same with bullish percent index, looks like we're pushing higher. So I'm generally speaking bearish, and then also MACD, you can see that it's not yet in overbought territory. So looks like GDX together with gold may have some room to run to the upside. To the very least, I'm guessing this is the first resistance, $16, and then next pretty clear resistance is here at $18, and then also the 200-day moving average is coming in here. So $18, another resistance level. All right, let me quickly tell you how to find us on the internet. Please go to MasterChartsTrading.com. We're very close to starting a trade alert services. I pushed back the date from October 1st to October 10th of this year of 2015. So if you are one of the people who are signed up for our mailing list, please do so now. And if you're thinking about signing up for our trading service, please sign up for our mailing list and you will get a discounted membership. We also have a blog where this information is posted, market recaps and all kinds of other information. We have a video section where I post the videos. And then also please do visit our public charts and social page. You will find that most of the charts I mentioned in this video are located in this link, public chart page. Also, if you have Twitter, Facebook, YouTube, or StockTweets accounts, please follow us there as well. That's it for this week's recap. Thanks for watching and have another great trading week. Bye-bye.